for investing.
Welcome back. Let's take it straight to the earnings that we have today. Tejas Networks, that's a stock that that's the stock that is losing in trade today on the back of a weak set of first quarter results. To discuss this and more, we have Sanjay Nayak, the MD and CEO of the company, joining us on the show now. Thanks a lot, Mr. Nayak, for joining in. Your revenues were down 31%. EBITDA was more than 60% lower, and a net profit declined by around 87%. What really went wrong this time around, and what sort of guidance do you have for the entire year?
Yeah. So first of all, as I had mentioned earlier and consistently been saying the same thing, that we are really not a quarter-on-quarter business. We look at the whole year as a basis. So what went wrong in terms of Q1? The government part of the business, which was 55% of our total last year, has shrunk to 15% of the total in this quarter. So that is primarily the reason for the decline for the quarter. But on the other hand, the India private and the international, which is more like the run rate business that we are really trying to increase, actually increased quite significantly and is 85% of the year. So hopefully, I would say, as the government business recovers in the second half of the year, by the time we finish the year, we again expect to have a good performance.
Okay, all right. Mr. Nayak, you're saying that you had told us earlier as well, we shouldn't look at it on a quarter-to-quarter basis. We take that point. A lot of your investors, though, are very, very worried because the IPO price was much higher. The stock is half from the IPO price. So importantly, if you're expecting things to improve in the second half of the year, what kind of a revenue number can you come up with? And I was also looking at the working capital days. The last time you joined us, you told us that it'll improve to normalized levels. Now that has not happened. So two-part question, revenue guidance and working capital days. When does it normalize?
Let me start with the second one first. So we had said when we last time spoke that by end of September, we should be able to normalize the working capital. The primary reason for the delay in the collections has been on one large account, which is the BSNL account. Although that part of our money is secured because that's for the BharatNet project, which is not the regular BSNL project. So we expect to collect that. There have been delays, clearly. Everybody in the industry is aware of it. So that part, we think that by September end, we should be able to get a significant part of that working capital normalized. So that's the second part of your question. Coming back to the first part of your questions, what we have been actually doing in the company is really transforming the company from a very heavy government dependence to more of an international as well as private dependent business. And actually on that count, we have really turned the company around because international earlier was only dependent on one particular OEM customer, and we have diversified from that last year. And our medium-term target is to have international to be more than 50% of our business. Last year it was 21%. We are very confident that we'll increase that number very significantly in this fiscal year itself. The second growth driver of our business is the India private business. As you saw the first quarter result, India private was close to 68% of our total. So that part of the business is growing very robustly. That's again a run rate business. There's a lot of deployment happening in the private accounts in India, and we are getting market share wins because of new applications. The government part of the business is the one which is lumpy. We had a lot of dependence 2 years back when we did IPO on the government business. And as you can see, even from Q1 results, a lumpiness in that business causes fluctuation in the quarter. So we're really tooling the company to make sure that without the government business, we have a good growth engine built up that will consistently improve margins in the long term, and at the same time, not have fluctuations in the working capital. So that's, I think, the kind of transformation we've made in the company.
Strategy, Mr. Nayak, if you could give us some numbers, what sort of revenue growth are you looking at this year? Last year, you did about 17%. You clocked the 900 crore mark, but that's still lower than FY17 that you did. And when you say normalized days sales outstanding or normalized working capital days, what do you mean?
Yeah, so first of all, by the way, we had actually, when we spoke last again, we said that we don't give an annual year-on-year guidance. We just give a directionality in which terms the revenues are going. So I'll not be giving a specific guidance for this year, except I'll say that the international will be the fastest growing part of our business. It grew 70% year-on-year last year on the international direct, and we expect it will continue the momentum, if not accelerate further. India private grew around 28% last year. We again expect that will continue to be at the same pace or grow faster. And the government is the lumpy part. Depending on how it comes out, the year will eventually end up looking. So that's one part. Coming back to the working capital part, our normalized working capital is around 140 days. We had almost hit that around this time last year. Because of, as I said, one particular customer and some of the government orders, which haven't really paid us the money in time in the last 4 or 5 months because of the elections and other things. we think that 140 days normal working capital is what we should be able to reach in the near term.
Will you grow this year though? There's a degrowth of 30% in the first quarter. So
yes, yeah, we still are targeting a growth for the year. And again,
single digit or double digit revenue growth this year?
It really depends on how the government business pans out. Again, if you recall in the last call, we have about 350 crores worth of government tenders which we won last fiscal year, which have not yet converted to orders because of delays in the government spending in the decision-making process. Depending on the timing of those orders, when they close, whether they close in Q2 or Q3, the overall government part of the business would be determined.
Optimistic that you will grow in this year, right, Mr. Nayak? You're optimistic.
I think I'm optimistic that we should be able to grow the business this year, despite the fluctuation that we see in the government business in the near term.
Okay, and very quickly, your market capitalization is around 1,000 crores now. I believe you have some cash in your books as well. What was it at the end of last fiscal? What is it currently?
We have as on date, we have about 231 crores of cash in our books. We are a debt-free company. We have zero debt. We have actually 1 crore of debt on our books. So we are really a debt-free company. We have enough cash in the books. We are well invested for growth.
So are you not looking at buybacks or returning the cash to the shareholders?
Not really. I think if you think about the companies that we compete against, these are all global giants, which are all $10, $20 billion in size. So I think we are well capitalized at this stage, and our best use of the money is to really invest into the business. And we're very confident of the way we have made progress in international and India private. And the opportunity size is very large. We are still in a business where data growth, broadband growth, and fiber optic network growth is very, very big, especially with 5G coming. So I think we have a very good plan in place to execute. Of course, the execution is important. And I think we have made progress in Q1 on the international and India private, which is what the investors were looking forward to. We have reduced dependence on government. The lumpiness in government will continue, as we all know, but rest of the business is solid, and we will continue to invest to really continue the growth momentum that we have built up last year.
All right, Mr. Nayak, thanks a lot for joining in. Definitely the shareholders will be asking a fair amount of questions because from 300 rupees now the stock price is around 100 rupees, much lower than the IPO price itself. So definitely the growth path that you're talking about, let's see whether that comes by or not. But meanwhile, we're getting some news that the FinSecchi SC Garg has sought voluntary retirement from government service. Remember, it was yesterday itself that Mr. Garg was moved from being a finance secretary to power secretary. So perhaps that hasn't gone down well with him. Sapna Das joins us on the phone line. Sapna?
Hi. So rehashing the developments. This is what they're given to understand as of now. Basically, the FinSecchi apparently has requested to move on VRS. Not very sure whether this request is going to be processed by the government. We really don't have an idea on that front as of now. But the fact that this request has been put in by the finance secretary is important and indicative of things. And I suppose that's where we should leave it.
Okay, all right. Sapna, thanks so much for joining in and filling us in with that quick update. Well, for the time being, the markets have seen a bit of a pullback, a couple of stocks that are fighting. You have IndusInd Bank that's moved to the high point of the day, sitting high with a gain of around 3%. Axis Bank as well has seen a bit of a bounce back. So good to see we're still sitting with a gain of around 50 points odd. Let's slip into a short break. You come back. Tata Motors as well as Ambuja Cements, they'll be reporting the quarterly numbers. We'll tell you what to expect.